Hi, good morning. I'm Glenn Royal, Chief Investment Officer and Partner at RHP Wealth Management. I'm speaking to you this morning to bring you up to date on some recent changes in the portfolio. We've had a sharp rebound from the April 2nd Liberation Day lows. Markets now have returned back to full valuations at 22 times forward earnings, which is a stretch at these levels. It's going to need the Fed to lower interest rates and earnings growth to be able to support prices at these levels. As such, knowing the risk that we're seeing on the pricing valuation level in the Fed that might be holding off on cutting rates rather than coming to the market sooner, it has us wanting to put some hedges in the portfolio. We've taken 5% from equal weight S&P 500, and we've moved that into both gold and, to a surprise for some of you, we put it into Bitcoin. And let me explain why. The reason for gold is it is a hedge against event risk, but also we're seeing a pattern of central bank buying that's happened really strongly that began after U.S. sanctions and the seizure of Russian gold assets of some 300 billion following the Russian-Ukraine war. Central banks around the world started buying gold for their own repositories, and we've seen that actually increase, and that demand still goes. So we're playing in with the trade of central banks on buying gold as a de-dollarization trade is going on. What led us to do the Bitcoin trade is de-dollarization. And by that, I don't think that the dollar is losing its position as the world's reserve currency by any means. We actually see it still dominate about 87% of foreign exchange transactions. But where you do see dollar weakness is in the commodity space. You're seeing moves by the Chinese yuan to create their own pools that trade in Chinese yuan, petrodollars, as well as US dollar. That little pressure, coupled with the global trade war and the movement against the dollar, has us looking at Bitcoin as a store of value in a declining paper currency world. Gold will benefit as well. It has a 5,000-year track record of doing so, crypto less so. However, crypto has been institutionalized, and that's what I want to mainly point out. It has me rethinking not the crypto space entirely, but one specific asset class that we have owned now in the portfolios, and that's Bitcoin. We're doing this through BlackRock's exchange traded fund, IBIT. They own the third largest holder of Bitcoin in the world. They have institutionalized this product. I'm also keenly aware that President Trump's administration, his sons in particular, are heavily involved in the crypto industry. While I'm not a big fan of cryptocurrencies and memes and different things, stable coins are the interesting thing to come, but we're not in any of that stuff. All we're staying with is the institutionalized Bitcoin product. And in that product, going with BlackRock rather than going out into what they call the cold wallets. And because frankly, I don't want to be kidnapped for a password for you guys. So we're sticking with the public markets and the safety of BlackRock in this space. Also, we have done some background analysis and testing that shows us before we did these trades, as a hedge, we are actually able to increase performance of the portfolio and reduce the overall risk we're taking to get that. So from a risk-adjusted performance, this was a good move, we think, in the portfolio. If you have any questions about this, I do encourage you to give us a call. We're happy to talk to you and address anything that we've done in the portfolio and the current setup in the markets. We look forward to chatting with you, and thank you for your time and this month to bring you up to speed on what's happening in your portfolios. Have a good day.